What's going on, everybody? Welcome back to my YouTube channel. Hope you're doing well today. And I can say I'm doing pretty well. Had some fantastic trades today, especially on pound USD. If you watched the weekly Forex Outlook and reviews yesterday, I posted it. You would have seen me call out the idea behind pound strength, beg your pardon, dollar strength and pound weakness. And I was able to capitalize on these two trades here. First trade was taken around 1:30 p.m. AM UK time, and then the second one was pre-London Open. The first position I closed out at 5R, second position I closed out at 3R, and as you can see here, I finished my day up, thankfully, plus 8R. Now, I am in a couple of other positions, but that's not important right now. I'm going to discuss with you how I took these trades and why I took these trades. And I'm going to share 3 tips with you today on this video, 3 tips for you to just think about as you move forward with your own personal trading. As I go through this, make sure you take some notes before you go into the live markets. Make sure that you backtest this. It's very important to make sure that you build the confidence and faith you need before you go into the live markets and risk your own money. As I always say, if you enjoy these videos, traders, please hit that like button for me. Subscribe if you're new to the channel. Welcome. And also turn on notifications for future videos. So let's get right into this. So as I mentioned, traders, I'm going to be sharing 3 tips with you today on how you can execute trades similar to the ones that I took on GU. And this usually is the way I approach my own personal trading. I'm going to keep it as simple as possible because, I mean, trading needs to be kept simple. To be brutally honest with you, it's the fact, in my personal opinion, why traders don't do as well as they could do is because they're constantly comparing themselves to others and others' results. And, you know, they may do very well with a simple strategy, but they start to see all these new strategies coming out, and then a new strategy coming out and a new strategy coming out. And what they start doing is just jumping ship constantly. And I know it happens all the time. I just want to let you know, in this industry, especially when it comes to like social media, YouTube, Facebook, wherever it may be, I'm just going to tell you now, just so that you're future proof of what's going to happen in your trading career. In the next 6 months, there's going to be a new strategy. I can 100% promise you that. In another 6 months, there's going to be another strategy. In another 6 months, there's going to be another strategy. And you're going to see new Instagram accounts popping up, teaching you about how to get these sniper entries and these bigger risk to reward ratios. And then once the fire burns out, they'll open another one or create a new one. And you'll see new ads on Facebook and new ads on YouTube and new ads on Instagram with this and that and all this absolute garbage. And I mean, some of them work, some of them don't. But I'm just going to pre-warn you, every 6 months to 12 months, there will be a new cycle of strategies that come through in this industry. In my personal opinion, you don't want a strategy that pops up every 6 to 12 months. You want to have a strategy that lasts a lifetime, and all you have to do is adapt and tweak based on the market's behavior. And that being said, clearly, we just want to follow a simple strategy that falls in line with the trend, because ultimately the market will go down at one point and it will go up at one point. And that is what we want to be focusing on. We don't want to be focusing our attention on where we can find liquidity and where the banks are trading. Because listen to this, if the banks knew that we knew as retail traders where they were placing their orders, do you think they will continue to allow us to trade that way? Surely not, unless there's some inside business going on and somebody's giving out information so that somebody can make extra money outside. You know, I don't think we're ever going to know the answer to those questions. And it just boils down to simple structure trading, to be honest with you traders. We're only trying to anticipate if the market goes up, or when to anticipate the market going up, and when to anticipate the market going down. And that is as simple as it is. Now, I'm currently in a trade at the moment on USD CAD, and I'm having to send this to my community just to share this with them, because I want to send them the results. This was the buy here. Oh, we've not quite made it there yet. We'll put an alert just in case we make it to the top there. If we don't, we don't. It is what it is. And yes, let's get back to the nitty gritty. I do apologize for that. Okay, fine. So we want to follow a simple trend trading strategy. So now the first tip I want to give to you guys today is a simple tip, but something that's overlooked a lot. As trend traders, what we're trying to identify is when the market is going to continue in this phase, which is the continuation phase. And what a lot of traders end up doing is they end up selling the markets down here and down here. Now, what we want to be doing as traders is we want to be taking advantage of this move, because the likelihood of us selling here and the market continuing down is very low. There's a much higher chance that if the market has pushed and is in a push phase, there's a higher chance price is going to pull back before a continuation down. So what we want to do, traders, is we want to be able to identify areas in the market where price is more likely to pull back as opposed to enter on a push phase, so that we can avoid these scenarios where price could potentially stop us out. So how we can do that? Well, it's pretty simple and it's not rocket science. All you have to do is you just simply have to wait for the market to pull back. That's it. Now, a lot of traders find themselves looking for areas in the market where price comes back to retest or deep pullbacks, or trying to find the areas in the market where price is creating the rejection so that they can jump in the market as fast as possible, just in case they miss the move down. Now, granted, this is just human nature and a lot of traders are going to face this. But what you have to understand, and this is a very important lesson here, is that it's very unlikely for price to come back to a level and react to it so aggressively that you're going to miss the move and the move is going to continue down. More often than not, price is going to create rejections at these levels, whether it be the perfect retest or the deep pullback. So what you've got to be good at identifying is not the area where price can pull back to, but rather you got to be focusing on the area where price is creating a rejection, or an area where price is failing to continue to push bullish in a bearish market structure or bearish in a bullish structure. And that's all I've done with GU today, taking 8R from the market. I'm just trying to isolate these areas here where price is showing signs that we're no longer pushing bullish in a downtrend, and price is starting to deplete that bullish behavior in anticipation that we'll see the market conditions pushing bearish. So that's tip number one. And it's a very simple tip. And some of you might be like, well, I knew that already, Rocks. You'll be really surprised. Even though traders know that the market is, or you're better to sell the market when the market pulls back, or buy the market when the market pulls back, most traders don't. Even when they do, what happens? They immediately see one wick rejection here, one wick rejection here. They buy the market, then the market stops them out, goes in their direction, and then stops them out and goes in their direction. So how do we avoid that? Well, with that simple tip that I've mentioned, wait for the market to create an area, a cluster where there's depletion in either or direction with indecision candles, wick rejections, bullish or bearish engulfing candles. Once you have that information, then guess what? You can move on to the next tip. The next thing you want to do, traders, is you want some sort of confirmation. So step number one is wait for the pullback. A simple lesson, a tip, or not even a tip, a scenario that traders do not wait for. Identify the cluster, the wick rejections, decisions, bearish and bullish engulfing candles. Then what you want to see is confirmation. Now, I don't know what time frames you guys use, but I focus a lot of my attention on the 4H and the 1H. And what I want to see is a candle close. So let's say now this is my key level in the market as a resistance. Price is just broken through this level, pull back, and now come to my resistance level. What I want to see is, from an intraday perspective, I want to see that the trend is clearly bearish. From a higher time frame perspective, I want to see that the previous behavior was bearish. And I want to see that the current candle that's pushing back into my retest level is now showing signs that it's failing to break. That will create my retest here. Then what I want to do, I want to make sure that this 4H or 1H candle closes, because if you decide to jump into, let's say, a bullish candle, even if it comes back to a retest level, what is stopping this candle from just continuing to fly up? Absolutely nothing. So wait for it to close. Allow the new candle to open, which then will give a higher probability that the behavior here will continue down with the behavior of the overall trend, and you can take advantage of a new higher time frame candle in line with your intraday trend that will see the market pushing bearish. Tip number 2, wait for your 4H or 1H candle to close into a key level. It lines up really nicely with lesson number 1, which was wait for the pullback and look for those cluster of candles with the wick rejections, indecision candles, bullish, bearish, engulfing candles. Tip number 2, sit back, chill out, and relax. Wait for your high time frame candle to close into a key level first, whether it be a bearish example here or a bullish example. It's the same scenario. Just flip it upside down or do it in reverse, and then look to take the continuations once the market has given you that evidence. Now, the final tip you want to be focusing on is a very, very important tip. Most traders look to enter the markets when price comes back to these key levels immediately. But tip number 1 should make you wait patiently, because we're waiting for the deep pullback into a key level. Tip number 2 should allow you to wait patiently because you're waiting for the bullish behavior to deplete and then enter on the new candle. The final tip is an amazing tip, especially for intraday traders. And once you've identified that retest or that lower high or higher low, what you want to do is isolate your structural low, identify where price needs to break first in order to make the new lower low, gather enough evidence from the key levels that price is failing to make new highs or new lows. And then once the candle closes, you're just looking for the shift. And this is where you want to sell. Once the momentum kicks into the markets and starts breaking below the levels. And in a scenario like this, what you can do is you can place your stop loss above the key level, and then you can target to the downside and in anticipation of a new lower low. Now, notice here in this scenario, I did not mention once about having 2 wicks, 3 wicks, bearish engulfings, haramis, back patterns, 50% retracement, 61.8, whatever you want to call it. I never said anything about liquidity. I never said anything about anything other than the fact that you're just trying to identify a behavioral shift from being bullish as the pullback to now bearish as a continuation, in line with the downtrend, and then only taking the trade once the momentum shifts down. A lot of traders are trying to enter up here with a smaller stop loss to get bigger risk to reward, and they just find that you get stopped out before the market goes down. Don't be that guy or girl. Wait for the market to talk to you first. Wait for tip 1 for the deep pullback. Look for the cluster of candles. Get the confirmation with a higher time frame candle close. Make sure that closes so that you can anticipate the next candle to continue in the other direction. And then once you get the information, only enter with momentum once price starts to break these areas here. And then at least you know you're on the right side of the behavior. And that's how I advise you to trade. So that's kind of the overall theme of my own personal trading. And then now I'll discuss with you the trades that I took on Pound USD. Now, looking at Pound USD, what can we see? Trend of the market is down. Let's change this color. Trend of this market is clearly down. We can also see from a higher time frame perspective that the current behavior is bearish. It's all red. Now what I'm looking for is I'm looking for the market to create an area where price is creating a cluster of candles with those wick rejections, indecision candles, bullish behavior depleting, bearish behavior stepping into the market. Once I have the information, what am I looking to do? As part of a lower high structural low, I'm looking for price to break the structure in anticipation of a new lower low. That's a simple entry there. The second one, this was taken at 1 a.m. Asian session, and this was taken at 7 a.m. pre-London, and we have the same scenario. In continuation of this downtrend, we have a structural low where we anticipate price to break as part of the downtrend to make a new low. We have also some confluence here, which is a really nice double top pattern. So now we're adding confluence. We also have the infamous cheeseman pattern here, how I like to call it. And then we have price breaking the low in anticipation of a new lower low as part of the downtrend. We have clusters of candles with indecisions, bearish candles, price stayed here for a period of time, price stayed here for a period of time before then a new lower low is made. And this is what we call keeping trading simple. The explanation after I just gave you the explanation prior to this becomes so much more easier because it is just what it is. Okay. And just mentioned sells on this pair on GU as well in my community. I'm currently in this sell as well, looking to take it back down to the structural low. I'm not sure if I will hold it to the low because I'm up 8R for the day already. And I mean, I could be closing this out at 1-to-1 as well right now, to be honest with you. I think I will. Oh my gosh. Yeah, I think I will close out on GU 8% of this position now. Closing that. USD CAD is deciding to pull back a little bit. So I think on this one, we'll just lock this one in at break even and see what happens. No need to risk it for the biscuit at all. This will be a break even. Okay, fine. And I'm also deep in the money here as well with CAD JPY sells. Just make sure I get this entry right, which is a break below this low here. And these trades were simply just taken based on everything that I've just shared with you now, just identifying the pullback, trading with a simple trend. And I think I'm just going to go for 1R on CAD JPY and we'll see what happens here. I'm not going to lock this in at break even yet. Actually, I could, because I've also locked in USD CAD here as well. We're almost going to hit take profit on this one. CAD JPY, the momentum is strong. We'll lock in this one as well. And yeah, that will be me for today. So traders, I hope you've enjoyed this lesson. It's very powerful. Please don't overlook it. And yeah, I mean, feel free to share your results with me as you continue to trade on. Other than that, traders, I just want to wish you a great trading week. And until the next video, we're about to hit TP on this one. And until the next video, continue to trust the process.